Uh, so, hi. So basically, today meeting is extension to the earlier call with the value picker, and basically many of the things would be not be repeated. So I'm not a SEBI registered advisor, and this is just for the educational purposes. And I do not have any positions in the agrochemical industry except the tracking position in the pie industries. So So basically, agrochemicals is a compilation of two different segments. One is crop protection and another is crop nutrition. So the crop protection is more like pesticides and HO1s, and crop nutrition is fertilizers. So basically today we are focusing more on the pesticide segment, which further have two subdivisions. One is chemical pesticides and another is biopesticides. Uh, on the basis of another kind of classification based on what they kill. uh, there can be classification of herbicides which kill weeds, insecticides, insects, fungicides, fungus, and there are like others which have rodenticides, molluscides, etc. So this is taken from the last call. So this is just the value chain of the pesticides industry. I'll just quickly summarize it. Uh, So basically what happens, there are intermediates like chlorine derivatives, chlorides, amine derivatives, crude derivatives, which are used as intermediates. Then these intermediates are sold to companies which create active ingredients. These companies, India Pesticides, Rallies, and these active ingredients are further sold in bulk quantities, which are mixed with adjuvants, growth regulators, to create formulations, and these formulations which you can call as pesticide. So basically formulation is pesticide. Then these pesticides are sold to marketing companies for distribution purposes, so the wholesale and retail as usual. So the last time Harsh has created this diagram, so I haven't gone through it, so I hope Harsh, is this like the correct one still, or
It looks reasonable.
okay? So basically, the global size of the pesticide industry. Just a second, why it has changed. Okay, so the global size of the pesticide industry. The global growth rate is around 5.5% in the last 10 years. So basically, earlier it used to be around $48 billion industry in 2013, and now it is like $87 billion. So the key notable fact is the chemical pesticide industry, chemical pesticide segment is actually losing the market share to the biopesticide. And these biopesticides are growing at a phenomenal rate. Like the last 10 years CAGR was 13.5%. So it's almost quadrupled in last 10 years. So we can also see, like, let's first focus on synthetic pesticides by value segment. So the herbicide is the biggest segment here. It's almost like is the biggest segment, is also the most the segment with the highest growth rate. So it's growing at almost 5.8% growth rate. Uh, and like the fungicide and insecticides are relatively small, and but like they cannot be ignored as well. So in the area of biopesticides, you can see that the herbicide is not as big as the chemical pesticide uh, comparison vis-a-vis, but it's still growing at a phenomenal rate. Like herbicide and fungicide together is constituting like more than 50% of the bio segment, and it's growing at around 14.5% around. So basically what you can see is just on a dollar basis. So in terms of rupees, it would be like 3 to 4% more. So it's a phenomenal growth rate. Uh, so basically, can you also read the heading, or is it something that is appearing on the top?
We can, read the heading.
Okay. So basically, India has grown. Like in 2013, India was 13th ranked in exports, and now recently it has gone to second. So there are only two major countries in the whole of the world which are having a dominant hand in this whole pesticide industry. One is China. China is alone contributing to 25% in the export segment, whereas India has also become the second largest player. It is now contributing to 12.7. So together, Indochina is around 37%. So basically, India, the majority of growth which contributed, the majority of this growth has come in from the export segment. So the export earlier, Indian export was like 37% of the total production, and now it has grown to 43%. So the export is a faster growing segment. But there is also a reason why domestic segment is not growing, and I'll come to that in a later slide. So you can see the statistics on the left side. In 2013, India was like exporting $1.7 billion worth of pesticides and importing 0.45. So the next export was $1.2 billion, $1.3 billion. So basically, Indian exports have grown at a 13% rate, 13.5, 13.4 something rate, and China exports have grown at 11.7% rate. So basically, India is faster growing, but there's also a reason because like the Chinese government was having a huge crackdown on these environmental. Chinese government was having these crackdown on these pesticide companies through their environmental laws. So they were not able to grow their production as fast as they could. So recently in 2021, these rules have changed. So basically, in the domestic segment, India used just less than 500 grams of pesticides per hectare as compared to US, which uses 17 kg. China used 2 to 3 kgs. So as and when there would be more income to these farmers, I guess they would be using more and more pesticides. I would tell you a recent case. It's near my hometown. So what happened there is some of the farmers tried using a pesticide known as paraquat. It's a highly, what you can say, toxic pesticide. So basically, in just the 3 years, there were 10x the sale. Like initially, the sale was just maybe like I guess 200 to 300 tons. I do not remember the exact quantity, but now it has increased to 10 folds in just 2 to 3 years because they have seen the results. So that whole area, small area, and that alone area is contributing to 15% of the whole Indian moong. So that is the power of using the pesticides in a right quantity. So Indian crop area under like Indian total area under cultivation is growing at an 8%, which is also a very good amount. And more and more people are using pesticides. Hence, so the area not under pesticide has grown relatively smaller. Uh, but the area under biopesticides, you can see it has grown at 17% CAGR. So it's almost doubled in the last 5 years. And this is just the area and not in the realization terms. So the next slide is there is another opportunity, which I was telling you. So India has relatively low herbicide penetration. And the reason for that is all of the farmers uses uh, domestic labor. So domestic labor used to pluck out weeds from their hands. But the situation is changing as the domestic labor is actually very expensive nowadays, and it has almost reached break-even point with using herbicide. So in the upcoming years, this trend is going to reverse as there is a huge price war going in the pesticide segment. So the prices of herbicide has been reduced, but the labor cost hasn't. So the farmers are actually planning to switch to herbicides. So this share will increase in the upcoming years. You can also see like India has relatively better penetration in insecticides and fungicides as compared to the global. Uh, So there's third opportunity area, like which I was talking about, the value migration from chemicals to biopesticides. So one of the demand driver is people are shifting towards organic foods, and there is a compulsion that if you are selling organic foods, it has to be just treated on biopesticides and biofertilizers. So that is just one of the reason why people are using, and people definitely get more realization in the organic foods. So basically, biopesticides is growing at basically you can see in Brazil, which is the biggest market for pesticides. In 2017, there were 107 biopesticides registered, which has quadrupled to 433 till March 2022. So you can also see in the patent activities, 2017 was the first year when there were more patents for biological pesticides than the conventional crop protection. Uh, the number was 173 as compared to 117. It was the first year in the history. So basically, you can see there is another opportunity area which is generic markets. So out of the total pesticide market, 70% of the market is generic pesticide. Out of the top 20 top selling pesticides, 19 are off patents. Generic pesticides usually cost around 80 to 90% less than the same branded molecule. So there are in total of 19 active ingredients that are going to be off patent in the next 5 years. So this includes more on the fungicides and less on the herbicide and insecticides level. So I couldn't exactly find the numbers attached to them, what is the market size, but in some studies they were saying that they in total have $2 to $8 billion of market size, all of these molecules combined. So even like assuming at an 80% discount, we can assume that it could add somewhere around $1 billion to $1.5 billion in the generic segment in the next 5 years. And all of the generic markets is usually catered by just India and China. Like these two are the only players which have the dominant hand. So Indian statistics is even better. Indians create 85 to 90% in their generic pesticides. There is another thing which actually makes it easier for the Indian players, which is a Me Too norm. So basically, what happens is, for example, there is a company which comes to India and registered their molecule, and then they are actually then they have to go through a process which takes around 12 to 36 months for all the registration checks, toxicity level, dossier production, and everything. But once the molecule is registered, there could be a many Me Too players which can come and get it registered under their name in less than 6 months. So there is a lot of this, what you can say, herd mentality in these companies. Basically, Me Too norms are relatively very easy in India as compared to China. China has stringent them in 2021. So there are some of the important pesticides. So basically, glyphosate is the biggest pesticide. It alone contributes to $10 billion in 2024, and like earlier in 2023, it was contributing to $6 billion, and it has grown at 4.7% CAGR. So in these list of 22, chlorantraniliprole is the only molecule which is patented now, and rest all are off patents. So basically, I'll tell you a little bit more about the glyphosate as the whole industry is dependent on it. It alone contributes to 25% of the herbicide, which alone is 50%. So basically, glyphosate is a $10 billion product in an industry which is $90 billion. So it's almost more than 10%. So basically, it was created by Monsanto in 1974. And even if you'll go to any of the website which is selling these pesticides, the first product that they will show you is a Roundup everywhere. if you search that you need a glyphosate product, they would show you Roundup. So even after this off-patent thing, Roundup is the most popular product. So it contains phosphorus and carbon. Pesticides, it is used in 160 countries and it has not been banned by any other country. So they are actually growth regulator. What happens is these farmers put in glyphosate as a growth regulator. So one of the side effect of a growth regulator is it also impacts the growth of a plant to some extent. But with the technology and genetically modified crops, these GMO crops are more, they are created that they wouldn't be impacted by glyphosate. Hence, GMO crops have a better efficacy with glyphosate, and with more GMO crops introduced in India, glyphosate would be more prevalent. Actually, this is something which I can say it's also an opportunity, but a boon. Uh, it's both a boon and a pain for an industry because earlier there were a lot of new molecule research which was going on in the industry, but relatively now it is decreased. So earlier, if I have a company which is creating a molecule, I will just have to pay in I would just have to pay $150 million, and it would take around 8.5 years uh, to research and develop a molecule. And usually a patent is around 20 years. So even after reducing 8.5 years, you still have around 11.5 years to commercialize it to earn revenue from it. But recently, that gap has reduced. Now it takes around 11.5 years to create a molecule, and the cost has doubled as well. So you just get 8 years to commercialize. So basically, this has impacted the impairment cost of all these companies, the big players. The good thing is Indian companies do not spend a lot. They do not have these R&D facilities as compared to Bayer, Syngenta, and BASF, Corteva. So these big companies are actually facing a lot of problems because they do not have they have to pay a lot in creating a molecule and they are not getting enough returns. So this is also a reason where if you'll go to these companies' annual reports, you can see that these global giants have defocused. Earlier, they were majorly in crop protection. Now they have diversified into seeds, chemicals. Some have diversified into paints. So you can also see the number of new active ingredients that are introduced per decade. In 1990s, it was close to 120, and now it has reduced to less than 40. So the thing is, in a near term, it is good for us because there wouldn't be any new molecule which would impact the whole of a value chain. For example, if a pie industry has focused specifically on pyroxasulfone, there is a less probability that we will come across a product that would be detrimental and would create a disruption. But in a longer term, there would be lesser molecules 15 years down the line for us to create generics. So basically, this is just active ingredients in the chemical segment. So the chemical segment is definitely decreasing, but biopesticide segment is increasing. So I would also show you talk about the 4 case studies, which shows how competitive Indian producers are, and it will also show you the moat of them. So basically, there was one molecule known as synthetic pyrethroid cypermethrin. It earlier it was imported in India at $104, and purity was also like less at 92% purity. Indian producer was able to come up with a better process, and they were then able to create more pure, like 97% pure at just 110 the price. So similar was the case was with isoproto isoproteron. It was later created by the Garda Chemicals with a better process, and then the same process was later adopted by the parent company the German company. So similar was the case with bifenthrin. It's one of the big molecules. The quality FMC is a company who was producing the bifenthrin at a scale, and its quality was 88% pure. Later on, UPL started manufacturing it at 98% purity, and which led to UPL capturing a big market share. Dicamba was similarly monopoly of BASF. Earlier, it was 88% pure, and Gardner Chemicals later started making at 98% purity. So, all in all, what I want to show you with this slide is basically Indian producers are not investing in new molecules, but you can see that Indian producers are more focusing on a newer process, coming up with a cheaper solutions. How cheap can we get? How, like, they are more focused on innovation rather than invention. And similar is the case with Chinese companies as well. So you can see this is a comparison of product that are imported versus locally produced. So you can see few of the products which were earlier 50,000 rupees per kg has reduced to just 15,000, 70% reduction. And this has been the case with multiple products. So you can see imidacloprid, it's a big molecule. Earlier it was at 3,000 rupees per kg, now it's less than 700 rupees per kg. So basically, India is very competitive at a price point. It's something that we do not have to fear. Even I was reading at a report why Indians were not cutting the costs, because Indians are always providing their locally produced active ingredients at a cheaper price. If a China is cutting down a price by $100, Indian producers will cut down it by $102 because they want to remain competitive. And when you will also see the P&L of all of these companies, they are still not faced with loss. Like recently, all of the prices have dropped by a significant 60-70% in the market. Still, they are not facing a loss in their P&L. It's still a small profit margin, whereas Chinese companies now are starting to face losses. So the Chinese company manufacturers have realized that this is not a sustainable price point which they can afford, but they have a mentality of going all in. So basically, they will put in more and more money, more capacity, until one of the major players or Indian players start taking back. So it's just like a classical mentality of playing poker, play until the other player folds. So basically, India doesn't need to worry about any other company except China in manufacturing segment, because we are the most competitive, and with the policies of China plus one is definitely working in our favor. So you can also read from many of the con calls that many of the people who earlier used to import materials from China have now turned to domestic production. And if Indian government start to have PLI scheme extended to pesticides industry as well, or agrochemicals in the pesticides industry as well, it would be a huge problem solver for the Indian industry. So coming to the big problem at hand, that is like active ingredient price correcting almost 50% from September level. And the major reason for it is China is actually dumping their product. So actually I couldn't get the data as on from like historical to the current price. So what I have done is I have checked that this is China agrochemical price index. So you can see at January 2020, it was somewhere around 3,000 levels. The usual price was 3,000 US dollars per metric tons. And by September 2022, it was around 8,000 metric tons. So it was still higher than the earlier price point. So you can also see the next prices, we can see it from that September 2022 to April 2024, that is recently 2 months back. The prices have again corrected from by 50%. So I am guessing that it should be around somewhere $4,000 per metric ton. So it should be somewhere close to what it was in 2020. And I verified the data from some of the molecules. Glyphosate price was 3.48 in March 19, and now it's 3.76. It's more or less similar. Bifenthrin is a big molecule. Its price has decreased a lot. uh, Imidacloprid was $22. Now its price is $11. Mancozeb has increased. But overall, if you would see the whole picture, the prices are somewhere on the same or a lesser level at historical comparison. So what is happening for this price drop? So the buyers are actually destocking, and all of them are in a wait and watch mode to assess before restoring to normalcy. So you would ask me, actually, what is the reason for this destocking? Apart from this heavy capex done by China and everyone is trying to cut everyone else, there is also another macro factor which is impacting. So earlier, if I had a factory and the interest rates were quite lower, less than 1% to 1.5%, I would be more incentivized to keep a higher inventory, because why to keep money in cash? It's better to keep it in inventory and expect it to grow. So these players were having a high and huge inventory in 2021, 2022, and not keeping the money in bank. But as the situation has reversed and the interest rates are now touching 6%, so this is actually doing the reverse. So they are actually cleaning up the inventory. Uh, the question is, can we expect some more pain in future? So according to my analysis, I can say somewhat yes. So earlier I started with the hypothesis and I was finding all the good things about industry which made me interested to invest in this. But the later point is when I actually came across how much capacity expansion done by China. It totally uh, blew my mind. So in the last 3 years, you can see the capacity expansion has been like cumulatively it's around 60 billion yuan. So 1 yuan, basically 7 yuan is equivalent to $1. If it's close enough. So you can see all in all, it's close to $10 billion. And usually the asset turnover in this industry is 0.7. So if you are doing a capex of around $10 billion, you can expect a sales turnover of around $7 billion. So our industry, which is $87 billion in total, is getting 7 billion additional capacity. Is something that, and the growth rate is still like quite low. So it usually takes around 2 to 3 years for the industry to absorb all of this capacity. So we can see uh, this all, which I'm saying, holds when the demand side is not impacted. But with the demand side is impacted as well, it might take some more time. So you can see from the chart in the like the, oh sorry you can see the chart. It shows the quarterly revenue of 34 listed Chinese companies, and you can see like the quarterly revenue of all of them has been decreased, and most of them are not profitable, and most of them are not profitable now. So you can also see that the Chinese uh, pesticide output from 2021 to 2023. So earlier it was around 2.5 million metric ton, which has grown to 2.6 million metric ton in 2016. So the growth rate was somewhat okay, 2.7 to 2.8% year on year. But the problematic thing is China, you can see in the volume terms, I do not have a number for volume terms, but the China last year export volume was around 2.4 million tons, 2.4 million metric tons. And China is doing a capacity expansion of 1.1 million metric tons in the intermediates and 0.53 million metric tons in formulations. So basically, China is increasing their capacity by 25 to 30% in comparison. So this would impact the world volume by around 6 to 7% on the supply side, and this again adds another point that it might take 2 to 3 years for the whole world to get adjusted to this capacity. The good thing is China has realized that this is not sustainable. So in 2024, they are removing their acceleration from the capacity expansion. So it is not the same. The 2023 was a huge year. So you can see just in 2023, in the 9 months itself, they did a 32 billion yuan expansion. On a molecular level, you can see they are more focusing on glyphosate, glufosinate, clomanthium, insecticides as chloranthriprole, as it is going off patent, uh, acetamiprid, and bifenthrin. So Indian pesticide company, if you see the P&L, so you can see the 5 years operating margin is somewhat we cannot see a lot of them. So we can just assess the price to earnings. So what I'm doing is I'm not planning to invest in these pesticide companies because they are closely interrelated. But what we can do is we cannot leave it. We can definitely have a wait and watch approach, or we can have a small basket approach, as because what many people think is if Sharda Cropchem is doing something, it wouldn't impact by industry. But that doesn't happen in the pesticide industry, because it might happen that one molecule is actually having a supply of specific intermediate which is also required by pie industry. So basically, maybe I'm following more of a basket approach, but Harsh has been tracking this industry more closely. I have been less aware of this, so he can better guide us on which companies are better to invest in. So my final take in all of this is China has reduced capex in this year, but it's still too much for us to absorb. And on the pricing front, I think the pricing has been stabilized, but it wouldn't grow uh, like it has grown in 2021 or 2022. It wouldn't go back to that level. It would more or less remain at the current level. Uh, might increase by 10 to 15%, but not at a huge level. So Indian companies are usually trading at a high valuations because of overall froth in the Indian markets. So the margin of safety is something that I'm not quite confident about. So what I'm thinking is to plan a basket approach to have a small positions in most of them, and with 2 to 3 more quarters, we can definitely increase the positions as and when. Uh, so some of the sources which you can refer to gather more knowledge is agro pages, agribusiness, PPFS webinar. There's Edge webinar, which is also very good, and Value Picker previous call. So that's all. Uh, Hello.
Yeah, thanks, Vyom, for the very nice presentation. One quick question. Have you looked at previous down cycles and generally how long it has lasted and
Yes.
what causes the cycle to bottom out?
Yes. So the previous pesticide industry hasn't faced a similar down cycle in all the molecules. You can say there was a slight similar kind of cycle in 2015-16, but it was not at this level. It was just limited to few of the molecules. But what happened, like the Chinese government became stringent on the pollution norms, as everyone was showing that they have good pollution control measures, whereas they wouldn't be having that. So in all terms, we cannot assess that the current cycle from the past cycles, but because it's very different. We just have to see at parallel KPIs. So the parallel KPIs, how many capacity they are producing right now, what is the demand, and maybe you can have an individual molecular approach, because the sale of glyphosate doesn't impact the sale of pyroxosulfone, or it's vice versa. So the cycles are quite dependent on the molecular. It's what you can see. Each molecule is an industry in itself, and cumulatively they are called one industry because their raw materials are quite or more or less similar, and their end customer is similar.